Hello, everybody. Welcome to the Afternoon Outlook here on Monday, June the 8th. Dr. Barton Jr. coming to you here from Newark, Delaware. It's great to be with you again. And let me see if I can pull up my chat box so we can see who's here. I hope you folks are ready for a wonderful long afternoon, because I'm going to be here with you. It's 1:30. We're not going to stop at 2. We may go to 2:05, 2:10, 2:15. Who knows? We're going to keep on going and answer a lot of your questions. We'll talk about some of your stocks that you're interested in. We're also going to talk about, we'll take some of your stocks that you'd like to see some of the dark pool data. What's going on in the world of the 42% of the markets that is hidden from sight, that data that we use to make our picks in the Dark Edge project. I will be able to pull up that information, show you some of that for your stocks in real time. We'll get to as many of them as we can. But first, wow, there's a lot going on. A lot has happened since we were together last Monday, and I want to talk to you about it. Now, in between times when we get together here on the live stream for Monday morning, you can also catch my stuff on Straight Up Profits. Maybe Greg, you could throw them up a way that they can get in touch with that so that you can see some of my thought process going through the week. And if you'd like to join me every morning in my trading room with the Dark Edge project team, Greg will probably be so kind as to throw a link up for that as well as we zip along. But a lot going on here. So we will look at some of the people out here. Dara from Ocala. Hey, Dara. Glad you're here. There's Greg's here. Glad that he's here. Yumara, I think you often called Damid. Glad you're here. So Sergio, hi. It's good to see you already on. So there you go. Straight Up Profits. Thanks for that, Greg. So we've got that going on. So let's talk about what has happened in the interim and what's going on here. As I look behind me in the S&P 500, we're going to look at that line in the sand that I gave the Straight Up Profits folks last week. I gave us right here in this room last week. This same line hasn't moved off my chart, and we've gone up and knocked heads with it twice, including today. We'll talk about that and what we might do with that in a little bit. But first, let's get some context for what's going on with this market. It is just crazy, and there's a huge reality gap between what's happening with the economic data. There has been with what's happening with the economic data versus the S&P just wanting to trundle up, just wanting to trudge higher and higher. The media doesn't understand it. Nobody's understanding it. Say, well, maybe this, maybe that, but the market's a complete disconnect. The market's not acting at all like the underlying data. Well, maybe what we found is that the market is showing us what's going to happen, not what has happened. And that might be what we saw on Friday, but there's some disconnect from the Friday data too. If you will remember, on Friday, we had an employment number that came out. Let me jump down here to the corner so you can, so I'll get out of the way of the chart and I can draw a little bit and we can talk about this. So hit this, and I'm going to jump down here to the corner, get out of your way. And let's talk about what happened. We were expecting about the consensus expectation for the big unemployment number that came. Actually, they call it the employment number, the non-farm payroll number, the NFP number. That came out. People were expecting a loss, a minus 8 million person loss. There were in the estimates no, and I'll repeat, no positive numbers. Not one analyst had put in a positive number that I've seen. If somebody's seen one, you can send it in to me. But there, minus 8 million. What we ended up getting was plus 2.5 million additional jobs added. Now, we got that. The markets went up. It's no surprise. Over here's the date. So we closed Thursday here. We opened Friday here and kept trundling up right to that line and pulled back a little bit in the afternoon. And everybody's going, wow, all these jobs added. And really, there's a couple of interesting things. Number one is that they were added only about a week of the reopening was included in that number. So how do we go from the month before? You'll remember, we'll erase all that. The month before, we were at minus 20.5 million people removed from the employment rolls for the month of April. So for the month of March, we added 2.5 million. But here's where some analysts now are starting to look at it and go, are we missing something? There is a reality gap between the numbers that the government themselves are reporting in one way and what they're reporting in another. Let's look at this very interesting thing. So to look at this, I'm going to pull over some charts for us. The first one I'm going to show that doesn't match up very well or at all is from data that anyone can get. This is from the St. Louis Fed. And it's their economic database called FRED is their database. And I just put in initial claims. As a matter of fact, here's how you can do it. We'll do it right here, and I'll show you exactly how I got to this chart. If you just go to Google and you Google, let's Google St. Louis, and you can even Google the Fed, St. Louis Fed, and then you put in initial claims. It'll show you this, and you can just click on that first one, initial claims, the very first one that comes up. Now, this is going to give you data all the way back to about 1960, looks like about 1960-ish, 5-ish maybe, 1965-ish. And you can see that there's never been a month where we've been over a million. The million line is this one. You can see it here right there. That's the million line. You can see since the 60s, and you go way back, still haven't been over a million initial claims on any given month. That all changed, obviously, with coronavirus and people just having their businesses shut down where they worked and therefore no jobs for them. And here's what we saw. So let's pull up those numbers and let's make them so that we can see the recent data. You can just drag the slider and look at it at the bottom, and I think you'll find this as intriguing as I did. If we look at what happened during the virus, here's March. So we went from having 200,000, 200,000, 200,000, 200,000, 200,000, 200,000 to 282,000 in the middle of March. So for the second week of March, then we went to 3.3 million. You'll remember when that bombshell dropped. Then we went from 3.3 million to 6.8 million, almost 6.9 million. And that was still for the month of March. This was a number announced in April, but it was still and that is for that first month of a blended month of April. So we got 6.6, 5.2 million, 4.2 million, 3.87 million, and then let's get into that first Saturday of March. So this is the first full week of March, or first the ending at the beginning of May. So not really, we can discount that one too. But let's count since then. We've had 4 other weeks since then. So the first full week of May, 2.7 million. Let's keep that in mind. 2.4 million. So that takes us to 5.1. Then we had another one for 2.1. That takes us to 7.3, and now at 1.9, so we're 8, 9, around between 8 and 10 million new initial claims added. But yet the jobs went up. People were asking for unemployment on the one hand, and then the number that the Bureau of Labor Statistics gave us for the monthly number is up 2.5. Well, maybe you say the continuing claims dropped off, and that's a good guess. Let's look at this number, which is the continuing claims. And you can see that starting at the beginning of May, the first day or two of May, they were at 22.5 million. So that's how many people had asked for unemployment and continued to ask for unemployment, continuing claims. It jumped up in the second week of May to 24.9, then dropped all the way down to 20.8. So 4 million people went off, but then another million went back on the next week, back up to 21.4. So the net drop in continuing claims was about 2 million, about 3 million. So could that be where all the people came from? Well, it's highly unlikely, and some people think there's some unusual statistics going on here. But what we do know is that people are coming off of continuing claims. The employment number was shown up. It'll probably be revised down next month. Nobody would be surprised to see that, but it surprised everyone, and that's where the markets sit today. So let's look at what's happening with the sectors since all of this has happened, since this has helped propel the markets forward. We'll bring this back over here in just a second, and we'll look at the sectors for a second. I'll look at some of your comments here. Glad everybody's here. Hey, Val, Kevin. I'm glad more people are coming in. So let's look at this very important number in front of us. Last week, we talked about this right here in the Monday afternoon outlook. I talked about it on Saturday with my straight up profits people in our outlook in our weekender video. And here is the number I want us to look at, the number that we traded up to at the end of 2019 and tried to get through once, twice, 3 times, 4 times, couldn't get through, finally broke through cleanly and never came back to look at it. We came down to it once, twice, 3 days, 4 days. Let's even not say that one was 1, although it kind of was. 5, 6 days down. Nope. 7 days, 8 days before it took off. Came back to check it again 9 times. Up, up. Came back to check it again for a 10th time. And finally went up and came back and checked that number again an 11th time before it broke through cleanly. Now, when we have a clean breakthrough up through a level and a clean breakthrough down through a level and all of these many checks in between, that says this is a strong support and resistance level we need to keep our eye on. But there was no reason to keep our eye on it till we got all the way to Friday, because we were trundling around here, and I told you last Monday that the markets were strong and we needed to continue to watch for continuing upside, and where was the next resistance level that we would meet. I drew these numbers, I drew this line for you, and finally on Friday, not finally, pretty darn quickly, by Friday, we had already come up to it and we hit it. And today we're ticking against it and actually trading just a little right around it, a little above it, a little below it today in intraday trading here on Monday. So what is likely to happen from here? Well, by lots of measures, if we look at overbought and oversold measures in the market, both on sentiment, what people are thinking about, in terms of surveys. They do surveys of individual investors, of institutional investors, and they publish those surveys weekly. Those numbers are very high, very bullish. We look at technical indicators like relative strength index, like moving average convergence divergence, MACD. We look at stochastics. All of those are at the top of the page. The market is due for a pullback, and I believe when we get it, it's going to be brief and it's going to be extremely buyable. We're watching for that next pullback to be able to add 2 positions, and I'm going to be watching it closely. I recommend that you do the same. But here's what I want to talk about for a little bit of our time today. Then we'll get to your questions, talk about the stocks you want to look at, talk about stocks you want to see some dark pool data about. What's going on in that 42% of the market that's hidden from traditional data platforms and other things as they happen. So let's look at these. Let's look first, though, at the last. We went up to this important resistance area that whoops, I can't draw it very well. Maybe I should use my finger. I can draw it better. There we go. Let's put this on. Well, I'm moving our. That's really weird. I'm moving our Fibonacci numbers. That's okay. I'm grabbing that. So if we look at this line, if we look at this line here, there, now we've got it. If we look at this line, we hit it multiple times. We finally broke through, and then we traded sideways. Then we've had this amount of data back until about May 22nd, and that's what I want to look at. What has been the rotation in the market? Because it's been a very, very different market the last 10 trading days than we had before that, where it was avoid all of the banks, avoid the other financials, avoid travel stocks, avoid all of those beaten down industrial stocks. All of those stocks were down at the bottom of the page, and they were to be avoided until 10 days ago when the risk on trade started. And let's look at what that looks like for a little bit as we look at some sector rotation data, and I'll pull this over for you to see. The first thing we'll look at is let's look at the market caps. Now, I'm going to be using the stock charts. I really like their percent change tools. So we'll look at this, but I don't like what they think we should look at for market cap. They've got spiders, mid caps, small caps. Let's look instead. Let's look at let's go from the traditionally slowest, the diamonds, the Dow. Let's look at the S&P 500, the broadest 500 companies. Let's look at the techs. And then let's also look at the small caps. And we'll pull those up. We're going to put those long term. You won't be surprised that the Qs have been the strongest over the past 200 days. But let's just go to that past 10-day period we were talking about, back to May 22nd. And this may surprise you if you haven't been checking in on this. The Dow has been up 10%. The S&P has been up 8%. The Qs have only been up 4% in the last 10 days, rotating out of tech into industrials and bigger and financials and even travel stocks, and rotating into small caps. Interesting risk on behavior rotating into those small caps, and traditional sector rotation into growth areas like industrials, like materials that haven't been strong before. Now, from there, let's look at what's been happening with those individual sectors. I have it already lined up for you here, so we don't have to go through that again. You'll see here we have May 22nd to the end of the close Friday, our last closing day. We have those 10 days, and these are the 10 sector spiders. So if we look at the 10 sector spiders, let's see how they have done. And all of them have been strong. You wouldn't be surprised, but let's look relative to the S&P 500. So if the S&P 500 has gone up about 8%, like we saw in the previous chart, what has the rest of the market done? Well, consumer discretionary, dead even, done just the same. Communications services has fallen. Now, why is that? Because some of the biggest name in communications services, the two biggest names are Facebook and Google. So they are part of that communications sector, XLC. So also down, as we've already looked at, technology, the XLK, which is right here, the XLK ETF. Who's been strong? Industrials, for Pete's sake. People that make things that hurt when you drop them on your foot. Industrials have been stronger than the market. Materials, stocks like DuPont, like Dow, the Freeport-McMoRan, people that get stuff out of the ground and then people that use stuff in the ground as intermediates to make for somebody else, those companies have been strong. Energy, mostly because they were beaten down, but also because there is hope that there'll be some renewed demand in the market. Who else has been down? Consumer staples, a defensive sector. It's down, not surprising. Healthcare, still lots of healthcare being used, but we're rotating out of the healthcare sector into these other sectors. Utilities have been flat, which they want to be strong. Utilities want to be strong in a low interest rate environment. They will be in the long term. I like them for the long-term plays. If you can find quality names like Southern, Utilities, buying those on Southern Companies, a utility, buying those on a pullback. I really like those plays. You can also get into American Water Works and other water-oriented utilities. I think those are all strong. But look at this. The strongest of the bunch have been the financials because the banks were so beaten down for so long. They have been in the dash for trash, picking up the worst beaten down value stocks and buying them in this 10-day sprint. Financials have been the largest beneficiary there, as well as real estate, because they were very beaten down as well in this whole coronavirus melee. So that's sort of how the sector rotation has been going on. And I think that we'll find good plays, continuation plays in some of these areas like industrials. I wouldn't be surprised to see banks get to a point where we get to a pullback in financials. So those are the two that I think that will rotate, that will rotate differently. I think industrials continue up. I think banks will eventually continue back down. I also think that we'll see a resurgence in technology not too long from now, because those names of those huge companies that keep making double-digit revenue gains quarter after quarter can't be ignored in your portfolio. With that said, let's take a look at those big six, the FAANGMA stocks, FANGMA, and we'll look at those in the next screen and take a quick look at where they are over the last 10 days. So this shows where these stocks are for starting at May 22nd, the last 10 days. And here's the S&P 500, stronger, the broader market stronger than all of those previous market leaders. Look, Facebook has been down over the past 10 days. Apple up 4%, up 1/2 of what the S&P's been up. Amazon only up 2%. Alphabet, Google up 2%, and Microsoft up 2%. Netflix, as things rotate out of stay-at-home stocks, they have taken it the worst, down 2.25%, while the market's up 10. Now, does that mean you should get out of these stocks and stay away from them? Heavens no. Use this time for relative market weakness as a time to pick up a few of your favorites. My continued favorites are Amazon and Microsoft. I think in the next 3 to 6 months, those are going to be the ones that will continue to move up. Amazon, after we get on the other side of the coronavirus issue, is going to roll out their delivery service to compete with FedEx and UPS. They're going to start rolling out their healthcare services, prescriptions, and other things they're going to do in the healthcare area. Microsoft has gaming coming up. They have the big Xbox launch, their big next Xbox launch coming out this fall. Try to say that 3 times fast. That'll be coming out, as well as Azure. Their cloud business continues to outgrow Amazon, and by some metrics is already outstripping Amazon as the top in the field, although still not in terms of physical storage. Amazon's still winning that battle. Okay, so with all of that said, that takes us most of our time today, but I told you I'd give you some extra time, and give you a few thoughts of what I'm looking at, what I like. But I told you I'd give you some extra time if you folks would like to be able to throw in a name or two. Let me get this out of the way of our charts so we can look at our charts, and I'll be happy to take a look at a few of the names that you're interested in. If I can get back to my chat box, there it is. So we got lots of folks here from all over. There's Val. Okay, Val, you have a question on Las Vegas Sands. Let's take a look at Las Vegas Sands. Now, where are they? They are in the getting out of the house stock group. A good thing. They should be up. As a matter of fact, I'm sure they are over the past couple of weeks. Yep, there they are up. The last few days, they gapped up and then traded down on both Thursday and Friday. But now they're gapping up. They're not gapping up, but they opened a bit higher than they opened higher than they were on Friday, and they're moving up, and they're up 4% today, like a lot of the casino stocks. I think if we looked through all those names and saw what was happening, one of the very constructive things you got to like about Las Vegas Sands is if you look at their line in the sand there at 50, an important psychological resistance level, but they have finally broken out through that. I like that very much, that they've broken out above their 50. Let's pull up just for our chart, let's look at, I want to enable our moving average. Let's see, there's our 50, and let's put on the 200. There we go. So we've got the 200 that's kind of the dark red, the 50 that's the black line on the chart, and there we go to show you where we are with Las Vegas Sands. Now, when you're looking to invest in Las Vegas Sands, or if you already have money there, how is it doing relative to its peers? What else could you invest in? You could invest in Wynn, which actually had a very good opening. I heard from some of our folks in the Dark Edge project. You can see WIN has tracked up all the way to its 200-day moving average. You'll remember Las Vegas Sands was right between the 50 and the 200. WIN has tracked all the way up to its 200-day moving average, so looking a little bit stronger than LVS right here. Let's look at MGM. There's MGM. It's about like LVS, about like Las Vegas Sands. Here's another outside the box gaming stock that I gave to Charles Payne last Wednesday when I was on his show, and or Thursday. I was on with Charles on Thursday on Fox Business, and I gave him Penn Gaming, and they are interesting. Let's see, I hit the wrong keys, one letter off everywhere. All right, Penn Gaming. I gave him this on Thursday. I sent him my notes in the morning. It took off the rest of the day. Friday opened higher and closed down above its 52-week highs. I like Penn Gaming. They're very different. So if you wanted to diversify still within the gaming world, they run horse tracks, a lot of video parlors, those kinds of gaming instead of the casinos with the resort component attached to it. So thanks, Val. Got that one. Let's see here. Let me see if I can pull up one other quick chart that we can use here. There we go. Logging in, good deal. All right, let's take one more look. Let's look at some dark pool data for you, Val. Something we do often with our folks in the Dark Edge project. Let's see what's happening in the institutional trades that are going on behind the scenes with LVS today. So here's LVS. Let's look at first at their options trades off. Pretty strong today. You can see the options trades, the big options blocks they're doing. The biggest one of the day was about almost 900,000 shares worth of options. The next one was red, then green, green, another red, green, 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 red. So I'd say we're about 2-to-1 for strong bullish trades, meaning people are willing to buy at the offer instead of selling at the bid if they're selling options. So they're paying up for their options. That's very bullish for LVS. So there you go. They're doing well in the dark pool data. All right, let's see what else we have out there in the chat box. Keep coming down. We got LVS. Barb, should we be buying Amazon here or waiting? I see, Benny, you're here. Glad to have you. Let's see. Amazon pulling right up near the top of the page. I believe you can be patient on Amazon. It could run away from us here. It's right at the top of the page trying to make new all-time highs. Full disclosure, I own it. I recommend it. And I think that this stock is really going to continue to do well for the reasons I said before. As opposed, Barb, to buying it right when it's trying to hit this breakout of this resistance level where it kind of sort of hit here, 1, 3, 4 days. Here's a 5th day, maybe yes, Friday was a 6th day, right in this zone, right in this little zone here, and we're sitting right there. You know, buy a breakout or wait for a pullback, but right here is a relatively technically expensive price for Amazon. Breaking out, it will confirm its momentum in the near term. That would be a good buy. Pulling back, let's see where you can get a pullback to. Let's say that you want to look for a pullback to this. If you want to be very patient, I think you can wait to the 2300s, but here's some levels here for there and around through here. So the 2400s, 2300s are good pullbacks. Really patient, you can wait back to these highs and get it down here at 2200. So there are some pullback levels to target on Amazon, and again, I believe right at the top of the page here, right in that resistance area, it's either wait for it to break out or wait for it to pull back, not buy it right at near the top ticks. So top ticks of the page. So I hope that's helpful, Barb. Let's see. We got one for Sonos for the in-home In-home speaker manufacturers, they had a huge pop today. Did they report today? Who asked? Gary, I don't know if they reported today, but they've had a huge pop. Here's the Beware. That's a great breakout from them. They've broken out of this nice, look at this nice pennant pattern or flag pattern here that you could draw for them. They just broke out of that on a continuation on their way up from here. One of the things to watch for, so while everybody else was piling in to stay-at-home names, like a speaker company would be like Sonos, you can see that that they didn't fare as well as other companies did, breaking off of the lows in order to get back to their highs. As a matter of fact, they were cut down by much more than a half on the way down and have made back less ground, still under the 200. So there again, if you're looking to buy Sonos, I'm waiting to buy it, and that's also a very significant area. Let's look here. Bump, 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 right across there where the 200-day and this support level here is showing up on our chart. That's that you're right into the teeth of a resistance level there. If you're looking to sell some after a pop, not a bad idea. But again, much like that Amazon look, buy it on a further breakout of that resistance level, or buy it on a pullback if it's a stock that you love. Okay, the Russell 2000. Let me pull it up for you, Michael. There's the Russell 2000. It was as we saw, it had been the weak cousin. It was the redheaded stepchild amongst all of them, all on the way down and even on the way up. And now, over the past few weeks, it has been playing catch up, has actually been over the last 10 days, the strongest of the four indexes, as we already saw just a couple of days ago. So you can see the level that it's going to have, that this is the resistance level it's going to have right across there. You can see where it's hit that multiple times here on the way down as it cut through. That's going to be its next level, but it just passed through the 200. That's a good thing. So if you believe in this rally, if you believe the fiscal stimulus and the monetary stimulus is going to find more and more its way into the market, not a bad place to be riding the small caps, especially on those big, strong up legs like today, where it's up almost 2% versus, let's see, the SPY, it's up 1.7, the market's up 0.7, again, on a big risk-on day. So thanks for that one. Edward, good to have you. Let's see, Naveed, how high could it go? So we'll take a look in a month, a 4-week time frame. So OXO is breaking out. Like a lot of these, excuse me, I'm going to grab a quick drink here. My throat's getting a little dry. A little bit of lemon seltzer. We get some water in there. This is obviously a huge breakout for OXO. Look at the consolidation it was in. This is a very classic Wyckoff pattern where we had accumulation all down in here. Now it's breaking out and it's jumping this key level, this big gap down. It just jumped that big gap down. So that's a very positive, constructive, short-term pattern for Oxy. Now, can it keep up this level of hitting 15%ers a day? I wouldn't bet on that. That's the one thing I think you can watch. And from here, can it put on attack on another 10 or 15 and get up to the bottom of this around 26? That's a 10 or 15. That's probably a very good target for the next 4 weeks, Naveed. And if you wanted to buy it today, I would say you've got to spread it. You cannot, with this kind of price move, the numbers you're going to see on your options chain are going to show you some really high volatility priced into this stock for the short term. I wouldn't want to pay buy naked premium on something that's had this strong a move for the last 2 days. So you might be able to buy some spreads up in the 25, 26 or the 26, 27, depending on what kind of spread levels you're going to get there to buy a vertical debit call spread. That you might be able to do, but I don't think I would buy out any outright premium on something that's had this big a move in this short a time. Hope that helps, Naveed. Microsoft, what kind of pullbacks there, Sergio? Let's get to the right tool. There we go, so I can type in some stuff. There's Microsoft. So it's a bit like Amazon, isn't it? Except the only difference is it hasn't exceeded this old high that we had back here. So Microsoft is caught on this resistance level right here. And if we put up, let's put up a real one so we can, let's put up a real line so we can see that resistance level right there at all of those tops. We're just breaking out of it. So that's good. I think a close above here, you could follow on with some add-on momentum, or you could look for a pullback over the past, month. Over the past month, 5 weeks, we've had multiple pullbacks to the 180. So could you get in at 180.5? Maybe. You haven't been able to over the past 8 or 10 days, but if you're playing a patient game for your long-term portfolio, I think you can certainly play that waiting game. If you're playing an intermediate swing trade, you might want to play the breakout here, although you're remembering that you've got overhead resistance at the old all-time high from back in February. Okay, Sergio, there you go. If you want to add to Microsoft. Thoughts on Tesla? Wow, it's really expensive, and wow, it continues to do really good, really well. They got some good numbers out of China today. They showed that they sold, I think, twice as many cars, twice as many Model 3s in China this month as they did last month, or May, than they did in April. So they doubled their amount there. What this might be telling us more than anything, let me see who wrote this in, Will. What this might be telling us more than anything is that the China on trade is still looking pretty good. Things that are selling well in China, those stocks are doing well. So you might continue to look for those. I mean, we look at Apple, which hadn't been doing as well as the S&P recently, but another new all-time high. How about them apples? Sorry about that. But Apple continuing to do well. I own it, and that one's continued to do well. Tesla is a head scratcher. Tesla is the bear killer. Tesla is the short squeezer, and it will continue to do so. You can see what it just did here. Made this little island breakaway gap. So that's constructive. But we're going to have overhead resistance right up here. If we look at it, where these old highs were back here. You got that high and that high just above you here, right around 955. This one's at 950 at the 945 and 970 right above you here. So those are going to be initial resistance levels. And where to buy this on a pullback? Wherever wherever you like. What's your risk tolerance? Can you wait for it to get back to 700? It will, I promise you. Might take a few months, but it will get back there. If not, I don't like buying Tesla at the top of the page right here. I'll just tell you that. Too much resistance overhead. Okay, Walmart, George. Walmart is one of those that was very stay-at-home oriented. It's been selling off at the stay-at-home stocks. I think its big push-up is probably done for now. It is holding the 200. That's a good thing. If you own it, I don't think there's any reason to get rid of it. But if you're looking for short-term alpha, short-term outperformance, I don't think you're going to find it in Walmart. Let's keep going down. We've got Gary. We'll take a look at Bed Bath & Beyond. There you go. Again, it's one of those beleaguered, got just crushed. Got crushed in the big pullback from up 17, 18 down to 4. Had some cash flow problems, if you'll remember, when they came out. But right now, it's trying to form this kind of, it's formed this beautiful little cup, and this is called a cup and handle. So you got a cup. It's a pretty big handle, but it gets a handle over here, and now it's breaking out of that, breaking out of the cup level. That's a strong breakout. How long can these beleaguered retail stocks continue to do well? That is a risk tolerance you'll have to answer. It's been one of those dash for trash kind of stocks. And I don't mean that as a derogatory term to the company. I'm just saying stocks that were low valued earlier on have now had this great push up, along with cruise lines, along with airlines, along with hotel stocks, all the ones that were beleaguered and beaten down. So, this is again a big, where's your risk appetite? Because as fast as this has come up, Could retail fall out of favor again, especially big box retail like Bed Bath & Beyond with their competitive advantage sort of questionable? I think that's a too big a possibility for my risk appetite. You might like it, and you might say, hey, we're going to get through the 200 to get up to this gap level here. And you know, if we got up to this gap level here, up at 12.13, then you got you a good 25-30% trade. So that's more of a risk to reward appetite type of trade for me. Okay, John, ROBO, ROBO. Yeah, breaking out of its highs. I don't know that that's the all-time highs. Let's take a look. Nope, got some higher highs back in early 2018, but it's approaching those all-time highs. So that's in this pattern, that's the one to watch out for. See what happens when we're getting up here. Let's see what that old all-time high was 46.20. Then we had the following month at 45.50, and we're trading right at, just got up to 45 today. So we got overhead resistance right above you. So if you bought it somewhere down in here and you're riding a nice 50% winner, you might think of trimming some off, making it a free trade, and maybe it'll break out and go. I think automation's a great place to be. I think we're going to, for safety's sake, to get people further apart, we're going to be using a lot of additional automation. I think we're going to be onshoring some manufacturing that we previously offshored to China and to Southeast Asia in general. We're going to be bringing, for strategic reasons, some of that back. High-tech antibiotics, things like that we're going to consider to be national security issues. We're going to bring them back on U.S. soil. So we'll need automation resources to be able to do that. So I like that, the automation space in general. Okay, let's see what else we got going on here. You bet, Val. No worries. Greetings from Hawaii. Hey, AMD. I like AMD, and I talked about this morning. That's a monthly. That's not going to do us much good. Let's look at the daily. It's got this. We've talked about this on here before. This classic volatility squeeze. I think the volatility squeeze on this is going to resolve to the upside. So we'll keep an eye on it. It's weak relative to the market today, but AMD doesn't really trade like the markets usually. It's not highly correlated to the markets. It'll have big up days when the markets are flat or down and vice versa. So that doesn't concern me very much. This pattern I think is very constructive. I think it's holding, as you can see. It's holding its 50-day moving average. That's what we see right here. Is this? Just pulled it off a chart. This 50-day moving average, this black 50-day moving average, is forming the bottom of that little volatility contraction pattern. I like it. Okay, let's get to B. There's the question on Microsoft. You know, it depends. It all depends on what you're doing. You looking to hold it for the long term as a nest egg holding? Yeah, you can buy it just about anywhere. I believe it's at that tough place that you could wait for it to break out, and then you'd have momentum on your side, or get it on a little bit of a pullback. I think it's kind of in that in-between area, kind of like Amazon is. But I think Microsoft's one, 5 years from now, 3 years from now, you're going to look back and say, I'm glad that's in my portfolio. Okay. Let's see here. We've got a few more. Yeah, thanks, Greg. I did in our Outlook video, in our weekend update video for all you SUP, for all you Straight Up Profits subscribers. Okay, we're 15 minutes past time. Let me give you a couple more. If you own the cruises and the airlines, yes, trim, Helen. How long can this keep going? This has been an incredible dash off the bottom, you have done well to be able to hold any of these. There's Royal, there's, let's look at Norwegian. I got to remember to put the holdings on the end of that one in. Look at all these things, and they all look the same, right? They all look like these little asymptotic ups. There's another one. There's Delta. There's American, the biggest asymptotic up on Friday. Yeah, I would trim some. I would take some of your profits on that at least. I would take a chunk of profits on those. If you think that this is going to be a long-term play, that we are just destined to roll higher, then you might keep some in your portfolio to see if you can get a bigger return on these. But I think the fundamentals are gonna wear on both the cruise lines and the airlines. Eventually, they're not going to be able to put as many people on ships and on planes, at least for the next 6 months, maybe longer. And I think that's going to wear on their bottom line for goodly on the revenues for sure. Their bottom line for a while. So that's why I would say that. Hertz. Don't be one of the day traders that can't get into DraftKings because there's no sports going on and you got to do something, so you're bidding Hertz up. Hertz is has just exploded. I think the only thing to do here is avoid it. I mean, if you're a day trader and you like to get in for the volatility and play this thing, then go in and play on Robinhood with all the rest of those people that weren't trading a month ago but now are. Other than that, I would sort of leave Hertz alone right here, and it's trying to rebound from declaring bankruptcy. It's an interesting play, but I think that's what's really driving this stock is the interest of the new day traders. Okay, let's see if we can get a few that people haven't hit on here. We got some folks asking about ALXN. That is a pretty good chart today for those of you who got in on this one from our 10-Minute Millionaire Insider. So yeah, this is right up now against a key resistance area. Let's see if it can break out from here. I'm hoping and trusting that it will. And that would be what would be even better if we got a little gap up tomorrow and turned this into, erase all of that, turned this into an island continuation pattern. If we got a gap up higher and put a gap in here to go with the gap in here, that would be a very nice continuation pattern. This thing would be set to soar. So liking the way this one is setting up. All right. No, I do not own any cruise lines, and I'm not recommending any right now either, Win. Thanks for the question. All right. Let's see here. Sold the puts. Good on something. I don't know what you did on that one. I'm not sure which one it is, but hopefully it worked out for you. So we'll do one more. We're already 20 minutes over on our 30-minute program. So let's take a look at WTI. Yeah, again, we saw with Occidental, a lot of the drillers, a lot of these companies are going to be banging up like this. Look, it's trying to get through its 200-day. You know, a couple of exceptionally strong days. What's going to happen with this? They said some of the OPEC plus countries are going to be cutting back. They've committed. We'll see what they do. They've committed before and not followed through. So they've committed to a 9.6 million barrel a day pullback. We'll see how that works out. I believe the market is selling that news. You can see there is the USO down. Here you can see the futures have traded off on the news, not up on that news. So I think it was a sell the news, buy the rumor into the meeting. Buy the rumor into the meeting, sell the news coming out. I think that's what we're seeing in oil in general. So those oil stocks, especially those drillers and the XOI companies, those ones that are the drillers and explorers, are going to have a little bit of a tough row to hoe. Look at this, a classical chart pattern. Any Edwards and McGee or Shabacker fans out there? Classic little flag here. Let's see if this is a continuation flag or not. We break through that level, we're going to see a lot more than the 200 period on a 30-minute chart get broken. All right. There we go. That's it. Glad everyone was here. Can we prepare for AMC to go belly up? I don't think it's going to die. I mean, it's had, let's see here. Let's get, we'll hit it. And somebody else has asked more than once for something else. AMC, that was the second time I saw AMC. So WTI is just the same. You'll see that, whoever's asking for that one, Kevin. WTI is just the same as the oil analysis I just gave. You can see, yeah, and probably was talking about it. That's probably the one I was just talking about with the other oil, the other drillers. Okay, AMC, theaters. Again, when are you going to go back to the theater to see a feature movie? They haven't been making any, for one. The pipeline's pretty dry, so we're not going to have a lot of films coming out. It's going to be an interesting. It's going to be an interesting play for AMC. They were left for dead, so they've more than doubled since they were left for dead. So we'll give them credit for that. But man, I do not see the business model where this thing's going to come snapping back a whole lot from here. So there we go, everyone. Thanks. Glad you could get in. Naveed, you've asked. I have no idea what this stock is. We already hit one other one. Yeah, somebody a big move up. Do you have their? Let's see. What does NKLA do? There. What? I don't even know the sector they're in. But yeah, it's popping today. Is that like, let's see. Anybody got me an answer yet? I just went over and looked for it, but you guys, you folks can tell me. Looks like I didn't find the profile real quick, so I don't want to spend everyone's time here looking at it. Yeah, it's way up. Probably on the news that, that Tesla sold all those cars in electric truck company. That's what I thought. Nicholas, I think it's like a Tesla, like the first name, right? So we got Nicholas and Tesla in those two names. Probably on the news of how well sales have been going for Tesla, although they could have had their own news. I didn't search for news on them. They could have had their own news on that. What do you do with this? If you own it, Naveed, which I assume is why you're writing about it or thinking of getting in, I wouldn't touch this with a 10-foot pole up here in this parabolic move up. But always remember, when we get a parabolic move up, we 95% of the time or more get the parabolic move down, and we form the Eiffel Tower, and you've got to decide where you're going to get off as the elevator goes down. What's going to be your get out point? What's your uncle point? Save some of those profits. Don't ride it all the way down thinking this is going to be the stock forever. Take your profits, get back in if you love it, but don't let a good rip like this go to waste. Put some money in your pocket if you're in that thing. Okay, folks. All right, glad to have everybody here. Enjoyed talking with you, looking at some of your stocks. We'll look forward to catching up with you again next week. We could be having some schedule changes on the Monday morning live streams in general. So be sure to check early to make sure what the schedule is going to be. If you look down below here in the schedule box, you'll be able to see who's coming up when. Greg and his team do a good job of keeping that updated. So keep your eye on that to know when who's going to be presenting. So right now I'm still planning for 1:30 next Monday, but that could change. So watch your schedules. We'll look forward to seeing you the next time we're on here for an afternoon outlook, or if it turns into a morning outlook or a later afternoon outlook, we'll look forward to seeing you then as well. Hope everybody has a great rest of the week. Stay safe out there. God bless you.